Hey traders, happy Monday. Chris Pulver here with your weekly outlook, talking all things stocks, forex, and cryptos. This week's outlook is for April 20th through April 24th. Big developments today on oil. I actually wanted to add a couple of screenshots here. So this is, I was contemplating between, a little bit of Superman, maybe some Jaws. This is a lion tamer, or the big story on oil today where I'm looking at the 10-day contracts going to literally zero. We saw 0.01, 0.04. I'm looking at the 10-day contracts, 20 days still out to like $20. So we just had really the rug pulled out from even the support around that $17, $18, $19 zone. This is actually a screenshot that I took on my chart. Just take a look at this. You can see that the WTI crude oil at 0.04. This was today's candle alone. So just a ridiculous candle. And meanwhile, as oil tumbles to zero, take a look and see what the effect is elsewhere in the markets. The stock market is barely budging. Volatility has come to, all but an immediate halt compared to what we saw back in March. We were looking at, 1,000 to 2,000 point swings every single day on the Dow Jones. Even today, we're at negative 472. So yes, we're seeing red in the markets. Yes, we're seeing red in futures. But I don't know if this is oil is a sign of things to come, if this is now the reality and the inevitable of the market is just going to drop. I mean, we have unemployment claims, we have, concerns around how does the economy open, how do things get back to normal. I just think that we are in, unprecedented times, and how do businesses survive this? It's certainly not going to be everyone survives and everything's back to normal. That is not the case. But I think that the inevitability is we just don't know how to proceed without panicking. So if, March is going to be revisited, then May could be a very ugly month. And this is what I've talked about the last several weeks with these weekly outlooks. Of course, I'm trying to position myself accordingly where is this a time to consider looking for S&P shorts? If I look at those inverse ETFs, if I do the SDS, that is an inverse ETF right here. So that is, if I want to go short the S&P 500, this is I believe a single leverage tool to buy. And if the S&P 500 goes down, then this goes up. So you can see that that drop in March was actually a rally in this instrument. And that's certainly one way to profit from it. I actually have a list here as well. If I go into this tool, this is part of my trading room document. We've been talking about these inverse ETFs for quite a while. There are ways to take advantage of this. So if you want to, if you expect the stock market to sell off, here are inverse ETFs that you can buy. So a single leveraged S&P short is the SH. The SDS is actually a double. That's a double leverage one. So SHMYY. You can look here, the S&P 500. Look, keep it simple. SH. If you want to short the S&P 500, that means you can buy SH. So let's take a look at that one really quickly. So if we wanted to buy SH going into hopefully May, if we're going to have a sell-off in the stock market, we'd be looking at buying this around 25. We had the previous highs from the March low in the stock market. The highs up here at 33. So is it a big jump? I mean, from 25 to 33, it's not a huge gain, but you're looking at $8 on a $25 position. You're looking at about a 30+% jump on your position. Again, that's single leverage. So are there other ways to play it? Sure, you can look at the other instruments as well. Let me go to that tool here. So you can short the S&P with these inverse ETFs. You can short the NASDAQ. You can short the Russell 2000. You can short the Dow Jones. All these are instruments. All you have to do is look up inverse ETFs, and they give you all these different instruments. They are single, double, and triple leveraged. Be careful on some of those double and triple leveraged ones. They are prone to reverse splits. They also get repriced end of day. There are different margin requirements and just things you need to consider if you're going to take that route. Again, equity management is always the most important thing. And I just think this is the time that you really need to reassess. Reassess your risk appetite. I know that we're probably being offered some of the best prices we're going to see in a long, long time. If we talk about some strong companies, I mean, one thing that slipped me. This is Amazon. How do we have a 20 to 30% drop in Amazon? And I thought, well, I mean, that's a promising start. Let's see if we can have a little pullback and then another dip to those lows and try to buy Amazon around 16 or 1500. Let's go back to these lows back in 2018. That's below $1,500. But instead, Amazon has proven to be one of the most essential businesses of this time with the convenience and probably absolutely crushing brick and mortar stores. And so Amazon goes from this dip all the way up to new highs. Netflix. Everybody's binging, right? Everybody's streaming. Why not? Everybody's staying at home. So Netflix does extremely well. You have a drop here in March to $297. Again, I was looking left. I'm like, oh man, I'm salivating. Let's buy this at 260. Let's buy this at 250. I was ready to get Netflix, but nope, we're at new highs. So companies like this, I absolutely would like to own. I'm just trying to buy it at a better price. Other companies that I've talked about, you actually may have seen this on my Facebook Live. I have these Ask an Analyst sessions with some good colleagues of mine. Capital One, we talked about looking to buy this around $40. We had a chance to buy it right there at $40, and it spiked up really quickly to 60. I did take some short-term profits on that. I'm looking to buy it again. I want to get my hands. I actually did take a position on Ford. So I took a little stab at Ford at $4.62. So I think it's going to get back down to the lows from March, probably. But where Ford is sitting compared to other U.S. automakers is pretty decent. They didn't have a bailout. They have a better balance sheet than most. They're partnering with Volkswagen on trying to be first to market for autonomous vehicles. Even if we make a switch from gas to full electric in the next 5 to 10 years, do I think Ford will be a part of that? Yes, I do. They also pay a dividend. So I mean, it's for me, it's a hold. I'm going to buy and hold. GE is another one. Are they too big to fail? I would think so, considering what we witnessed over the last several years. GE going from $31 all the way down to a double bottom around $6. So could I hold it long term? Sure, I'll take the chance at $6, even returning back to 13. That's 100% profit. So I'm willing to take positions on things like that. So I mean, keep this perspective of the opportunities we will see in the next 6 to 12 months will be the best we have probably ever seen. It's certainly in the last 10 plus years, which I think is fantastic, and that's really exciting and optimistic. But at the same time, we're going to face some really tough times ahead. I don't know how things get back to normal, but again, I'm not making these videos on that subject. I mean, I want to talk about directions. I want to talk about what we're doing as trading. I think if anything, this is a great time to be focused on trading. So look, if you are working from home, if you're not working right now, if you've been furloughed, if you're taking a pay cut, this is still something to have an active hand in what you do with your finances. So if there is some of the best opportunities we have seen in a decade, easily a decade, if not maybe the best time we've ever been investors, I think you owe it to yourself to have the proper tools and education and resources to profit from this. So let's go through some currency pairs. I think the Aussie is still likely going to continue to gain some strength. CAD, look, oil drops to 0 today and the CAD barely budgets. Here's a currency strength chart for Monday. Let's go ahead and refresh this to current time. So we have CAD as the weakest, but take a look at our highs and lows. I mean, we did not see a ton of movement today. The New Zealand dollar stands out as one of the overall winners for the morning as far as strength and weakness. But in the context of what we've seen in the last several weeks, this is very little movement overall. The Aussie New Zealand was a great move last week from 104 all the way up to 106. So you can see that we're getting pullbacks on that right now. The New Zealand getting a little bit firmer has pulled that pair back to around 105. But I still remain bullish on that particular instrument, Aussie New Zealand, heading up towards 107.50, and now I'm just looking to surround it to buy some dips. CAD is the weakest on the day, but not by a landslide. I mean, overall volatility, look at the Aussie CAD. Not much movement. You're talking about a daily trading range maybe within 40 to 50 pips on the entire day. I still like Aussie CAD to the upside. Aussie Swiss. I am no longer in Aussie Swiss positions. I thought that this pocket, this gap here right around 6,200 was a safe level to exit everything. And since we had our flash crash and our drop lower in that bottom in March, and we've recovered from there, I mean, this is 53 all the way back to 62. That's a 900 pip recovery. Now, in my world, I think if the market balances that well from this slide to this recovery, look, this is currently like a 50-50 zone. This could just oscillate a little bit longer and continue to drift higher, and that's fine. But if I was hanging on to bad positions here and I just sat in these drawdowns, getting the market to come back in your favor, I think traders need to be looking at either taking whatever profit you had from any of these level in positions or getting rid of this overall bad position just in case that structural damage has been done. And that's what I talked about a lot last week. I mean, big levels here on this Aussie Swiss are right around 63 to 6,400. Can we get back to that level? Sure, we can. But what if we end up dropping down first before we go back up? What if we drop all the way back down to these lows in March before we go back up? I don't want to sit and hold these positions if we're going to see another significant drop to the downside. What I'd rather do is take the profits that I had on these downside moves, wash away those, these profits, wash away any bad trades and drawdowns, manage my way through this so it's unscathed or slight profits or small losses. Anything that's manageable is totally acceptable. And now I am positioned accordingly. I can position and profit from this. I can position and profit from that. So if we have another move, we look to take advantage of it, and those profits moving forward help just get you back to where you need to be. So pairs like Aussie Swiss, Aussie dollar, if anybody was in the Euro Aussie upside down, that was a 2,000 plus pip move to the upside and downside. So, I tend to stick to the lower volatility currency pairs for trades I'm going to hold with kind of no stop in sight. But I just thought it was a fair level. I mean, coming back to this pocket inefficiency and gap, a 900 pip retracement on a low volatility pair, I've got to play it safe, and I've got to be willing to take some losses here, which I did. I washed away some bad trades, but I took some profits over here to kind of balance things out and get myself back essentially unscathed. So now I'm going to be positioning accordingly, whether it's bullish or bearish coming forward in the next 4 to 6 weeks. I would imagine easier for the bears to take this lower if we see more risk off trading, but that confirmation hasn't happened yet. So what do I need to see? If the bears break below this level on a daily chart, I will be a seller. If the bulls break above this level on a daily chart, I will be a buyer. And I look to scalp it with anywhere from a 1 hour to a 30-minute or a 15-minute chart and just follow and try to pick up a couple of trades and some decent profit on the next breakout. Aussie dollar, same thing. Aussie yen, same thing. We had some really nice recoveries. I mean, look at this. We're gravitating on the right-hand side of the trend line, coming back to retest the trend line. You notice that we haven't broken the high. We haven't broken the low. So we are sitting out here in the middle. I just don't want to be positioning myself for any long-term movement. I think that this recovery back to this gap right there. I mean, look at the low, look at the gap, look at where price came back to, and now it's struggling to hit any higher. So can we take out this low? If we do, I want to be a seller. Can we come back to this low? Can we come back to these lows? Absolutely. If you had March to do all over again, and this is what March was offering, and this is what potentially May could be offering, would you want to take advantage of that movement? I think the answer is yes. So if that's the case, I want to be positioning for that. So I'm looking for price to break below this low. That was from last week. If we break below, I'm looking for confirmation, and I'll look to start deploying some trend systems. I have a great system called Right Trader Max. I've been using that for the last 3 or 4 weeks, and it makes my decision making really simple. I just have price confirmation, and I let the system trade on whatever time frame I think is best to get some entries, keep my stop losses out of the way, and then manage my trade. So it's been a really nice way to participate, and we picked up a ton of pips together between my trading room and just letting the system work for us. But again, let it trade in some open space. So if we break below, break above, then it's a pretty simple trade. Aussie dollar, same thing. Aussie dollar, we have not broken the high. We have not broken the low just in the last couple of weeks. So this high right there, again, came back to the flash crash low, came back to that little pocket right around 6,400. A good spot off the lows at 55 to 64. We're talking, again, almost 1,000 pip recovery. If you can't turn a drawdown into profit with 1,000 pip recovery, then your positioning and your equity management is pretty bad. So does it happen? Sure. I was in trades up here. I was in trades up here holding the Aussie dollar. I had to work my way through this, but these profits washed away some of those bad trades. That's fine. So now I am no longer in Aussie dollar anything. If we break and go lower, I will sell. If we break and go higher, I will buy. But it's neutral, and I want to trade accordingly. So pairs like Aussie yen, Aussie Swiss, Aussie dollar, this is my outlook. CAD yen, Swiss yen, Euro yen. I mean, Euro yen is one that we've talked about in my trading room. If the Euro yen breaks below 116, currently trading at 116.98, just below 117. On the daily chart, look at this on the daily chart. If we break below 116 on a daily chart, there is definitely room to the downside. We have these lows from last year. We have these lows getting tested once again. Can we break below this and have a free-for-all move from 116 down to 110? Yeah, this is a great channel on the weekly and the daily chart. So can we get something like a trend on smaller time frames to take advantage of this volatility from 116 to 110? I certainly hope so, and I definitely want to be in that trade. So what's going to be required? Confirmation first. So let's get price to break below 116 and then see if we can pick up some sell-only directions. Again, Right Trader Max would be a great robot for that. So, look, in some of these weekly outlooks, I mentioned videos. I mentioned, my Flex trading room, my trading room. I mentioned indicators or systems. If anybody's interested in that, just send me a message. Send me a message on YouTube. Send me a message on Instagram or Twitter. You can send me messages that way. Here's a quick look at those. These are my handles on Instagram, Twitter, and Facebook and YouTube. So at pulver.chris on Instagram. I get a lot of private messages every week on Instagram, at Pulver Chris on Twitter, and my YouTube channel. I get a lot of comments and feedback as well. So just leave me a message. And if anybody's interested in some of those features and getting that right away, you can jump into smarttrader.com. There is a marketplace feature right here. My Flex Trade Room is available. We also have indicators, we have scripts, we have tools, automation. So when I talk about Right Trader, we have the indicators. When we talk about Right Trader Max, I'm talking about a robot. We have scripts and EAs and things like that available. So if you're at all interested and it sounds like something you would like to see or have, then just let me know and I'll point you in the right direction and give you the proper links. But it's right here on smarttrader.com if you're interested, and just keep, of course, following these videos, and hopefully it helps. So that is what I'm looking at for Euro Yen. Let's see, Euro New Zealand, anything on these risk off type trades. You know, Euro New Zealand has had a decent little falling wedge, and we started to break to the upside. I think that we're trying to put in a low on the Euro New Zealand. I think we're trying to put in a low on the Euro Aussie. So I think this week, my outlook is I like this level. I like this level. I think that the Euro New Zealand heads up a little bit higher. That wouldn't be surprised after, again, this giant move to the upside and drop, and then we started to channel our way into a falling wedge. We started to break out of that. So I think that the safe play is this area, stop area below, see if we can get this to drift back up, even just short term, from current price around 79 to around 82, 8,300. That's a few hundred pips to the upside, and I'll be looking for trading that kind of intraday throughout the week and see if that price action holds. Euro dollar, talked about this last week in Facebook. I think the best play on euro dollar is to do nothing right now other than wait. In the short term, we may end up drifting back down below 106 all the way down to 105. From there, I'm really a super interested buyer, but on confirmation only. Otherwise, I think that our 2-year channel that's been happening since most of 2018 to 19, after a big shakeout of volatility, I think that we're just going to return to that 2-year channel. So I don't think euro dollar is interesting at this time. Pound Aussie, I think this one is putting in a short-term low. We've got some channel trading. Look at these equal lows right here. I think that this pound Aussie from this low to this low puts in a little bit of a bottom in the near term. I'm looking for this direction to be bullish for this week and try to trade this back up towards 99 or even 2,000. The pound CAD, I actually had a robot set up to sell the pound CAD. We just never had confirmation on it. So pound CAD is... well, I'm just going to stick with the structure. I mean, if the pound CAD breaks this level, then I will short it. The CAD is going to be an interesting currency pair this week. They held rates the same last week, I believe, at 0.25%. But oil, if that's going to dictate how the CAD is going to be priced in, we might see a weaker CAD. So where do we break? If we break here, then we go higher. We look left and we find some resistance. So we might have a jump from this, 76, 7,700 break all the way up to these highs around 1.80. That's a few hundred pips to the upside. However, we've dealt with a lot of consolidation in the last couple of weeks. If we break back down here, I will be scalping, possibly scalping to these next support levels. If we break this support level, I had a sell trade with my robot. If the candle closed below 1.7170, which is right here, 1.7170, then I wanted to deploy a Right Trader Max robot to sell and sell only. Now you can see that that hasn't confirmed yet. So I may get that robot started earlier if I look at more confirmation that is bearish. However, I'm going to kind of wait maybe 6 to 12 to 24 hours and see how the market reacts to oil's pricing today, how that affects the CAD, the currency markets, the futures market tomorrow. I will be interested to see what price action looks like tomorrow with gaps. I mean, if we have big gaps in Forex over the rollover period or gaps in futures going into tomorrow's trading, I want to be, kind of conservative and safe and make sure that I'm following direction, following price to the best of my ability without being overly aggressive at this time. So I think pound CAD does offer some good structure, but confirmation is key. So if we hit this level and we reject, that's a good sell structure. If we had this momentum going to the downside and breaking lows, then we have a great opportunity to sell the pound CAD. But I will also buy it. I mean, if we get to these highs and we break above and it keeps going higher, that's still a 300 to 400 pip area back to those highs. So I'm not opposed to going either direction. I just want more confirmation. Elsewhere, what other currency pairs am I like? Aussie, New Zealand, I continue to talk about this one. We had a nice little pullback. We're currently around 105. All I'm really looking to do on this pair is basically between 105, 104, and 103. I'm just looking to buy more. So I'm looking for these to be dip areas to buy this pair anywhere from this trend line break. So, if we pull back into 105, 104, 103, this is still my profit target. I think that these offer additional bounces all the way up to at least 107.50. So I'm just gonna I took some profit. I was up to about 21 positions on the Aussie New Zealand. I scaled that back to 12 and took a lot of profit. I got back in with another 3 or 4 positions. I will scale those out as needed. So I'm going to continue to work and massage this position with stacked levels to buy higher to my profit target and levels to buy lower on dips. And once I add the dips, I don't feel compelled to buy those buy stop levels higher because I can get the entries lower. So I still like Aussie New Zealand to the upside. CAD Swiss is another one I think we can review. CAD Swiss I like. Overall it's still a bullish pattern, but again, with oil prices, I am prepared for possibly this price to come in and test these lows again. It's clearly having a hard time breaking that gap. We do have a ton of pockets and inefficiencies up here towards 7,100, which I strongly believe will get there. But this might be setting up for a drop first before we get the rally that I'm after with kind of the range or a double bottom formation that gets us back into these pockets and levels of support and resistance. So I still like CAD Swiss long. However, I think if you're interested in buying it, it's at the lows that you want to look for the bounce. So if you were able to take some profit here, we did fill the gap. We did a pretty good job of doing that. I still think we head higher towards like 71 to 7,200. So I'm still holding out for more gains on the CAD Swiss. Another pair that I'm watching very closely that has yet to jump is we're currently at 105.13 on the Euro Swiss. This is a really good trend line to keep an eye on. All right, so it's really just a channel. We have this, oversold condition. You can see here my relative strength is oversold. I've got disagreement with price and momentum. I just need this trend line to break. When we get these lows to finally form enough and have the bulls all of a sudden jump up and confirm, then we should have a pretty swift move towards 108 to 109 or just head back into this outer channel resistance. It is in that area that I will be pretty aggressive on buying. So I'm looking at, buy stop levels, which means that I want price to go higher and I'm going to get filled at those open space levels rather than putting in buy limit orders, which would be, get me in, but there's no confirmation to be actually buying it yet. So once price confirms, then I'll be looking to buy and buy pretty aggressively because I think we go from 106 to 108 really quickly. I think we go from 106 possibly even to 109 really quickly. So I'll be looking at that stuff. But Euro Swiss I like. So my plan this week is to kind of assess the vibe of the market. I think that if oil is giving us a precursor of things to come, volatility is probably going to pick back up. Things I've talked about the last several weeks in these weekly outlook videos. The volatility index. If the volatility index, which is at 43, if we see this VIX close back above 50, I'm going to start waking up early in the morning. I'm going to start looking to day trade again in FOREX. I'm going to start looking for this VIX to start getting back up to highs as the reality sets in and more panic and fear. And again, whether the market overshoots it or not, this is opportunity. All right, so this was opportunity. Back up above 50, that is opportunity. That translates into higher volatility in FOREX, higher volatility in stocks. This would be where you take advantage of those inverse ETFs. This is where you take advantage of day-to-day volatility in FOREX. So look, be prepared and be willing to work. Some of these, difficult decisions you'll be making now could have a profound effect on your financial future. So again, I think this is a reason to consider and just acknowledge how much opportunity we actually have. This certainly feels a lot better to have an active hand in what we're doing versus hoping that everything turns out okay, hoping that the bailout, hoping that the stimulus bills, hoping that that's not going to work. All right, that's not going to help everybody. Right, that's going to help the biggest, the ones that are not going to fail in the first place. We'll probably see more mergers and acquisitions. We'll see businesses fail. I mean, that's going to be the harsh reality with the next 6 to 12 months if this gets worse, because nobody knows at this time what normal looks like again. So what we can do is we can take advantage with the present. And if this is how we do it as traders, then that's what I'm here to help with. So I hope that helps shed some light on how to be prepared. Again, if you need me, send me a message. I'll offer whatever help I can. Videos like this, my YouTube channel, make sure you subscribe, get those notifications. And look, I would certainly love it and appreciate it if you, not only like and subscribe and get the notifications, but share these videos. If you, your family, friends, anybody you know that could benefit from this, share it. I'm here to help with free education. I think that we're going to have some of the best opportunities we have seen in a long time, but I just know that it's too easy for a lot of people to do nothing, and my concern is that doing nothing is not going to be beneficial to those that are just kind of at the mercy of their paychecks, at the mercy of their investments, at the mercy of the markets. I think when the markets are moving, we need to be agile. They always say that you can't time the stock market. I've got a good friend of mine, Scott Welch, that has this great research about, yeah, that's great. Long term, the market's return 7-8% a year, but you're also dealing with 50+% drawdowns. I mean, imagine your wealth having peaks and valleys of you're up this, withstanding this. Now you're up this, withstanding this. Now you're up this yes, this is your 7-8% increase, 7-8% increase. But imagine being better. Imagine being able to protect your profits up here and then take those profits and apply them at a better time. So they say you can't time the market, but traders, you can see this stuff coming. You can see, years and years of overextended moves. You can see days, weeks of divergence. I mean, whether you want to be a full-time trader with FOREX or other instruments, or just be a passive investor, there's still ways to know how to protect your darn profits and protect your money and know where to apply that and invest later. But just having no active hand in this whatsoever just means that, yeah, you're completely at the mercy of the market. And I hope everything does turn out okay. But it's going to be a tough road ahead. So this is a good time to really educate yourself and focus on what you can do to help yourself. So that's it for me this week, traders. If you need me, contact me. All right. I'll see you in the markets. Happy trading. Talk to you soon. Bye.